Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today was a big day in financial markets because the Fed chair, Jerome Powell, came out and talked about their decision. It was already priced in that there was going to be no cut for this meeting, and there was no cut for this meeting. But the noteworthy item, there's a quote right here to see directly. Based on the meeting today, I would tell you I don't think it's likely the committee would reach a level of confidence by the time of the March meeting to identify March as the time to do that, talking about cutting. So basically saying, we don't think we're going to cut. Now, the Fed funds futures interpreted that to mean that, we have a 65% chance now of no cut, basically, but then obviously cuts starting in May. Now, looking further out on the Fed funds futures, I'm a little confused because I have these two sources that I typically use for Fed funds futures, and as you can see, this one shows the December meeting showing a 42% chance of being in the 475 to 400 range, and investing.com, which says they get information from the same website from the CME group, is showing, and it has the same, it even says the time that it updates. It's like it's supposedly on time. It's showing a 45% chance of a 400 to 425% chance. So I don't understand the discrepancy. If someone knows why that is and would like to comment below what's going on there, I'd love to hear it. So on to the main data. Today, Wednesday, January 31st, we had ADP employment come out. Last month's was 158,000. The market expectation was 150,000, and it came in much below that at 107,000. And so, that came out along with a lot of earnings. There have been, apparently this week is a huge earnings release. So I don't know if markets are, it's hard to say how markets are reacting to which thing. We have the Fed meeting, we have tons of earnings information coming out, and then ADP employment coming out here. But we'll do the best we can. Again, when we have big events like this, it's good to sort of like wait to see how the market's going to react over a few days, because something can react violently one way and reverse completely the very next day. And so, but it's still interesting to watch. And so we'll go through those charts. Well, the charts that I found interesting. So the first one is the S&P 500. On the opening, we had a drop. Obviously, this was from a combination of earnings data along with ADP employment being lower than expected, which is interesting. Bad news was for a while good news, saying, oh, well, it secures more cuts coming. But, is this the first sign of bad news being bad news? I don't know. It may have more to do with maybe earnings of a lot of companies weren't as good as expected today. And then, you look at 2 to 4 p.m. This is when the Fed came out. 2:30 is when his speech went up. Markets went down. Mostly on his comments about lower expectation of a March cut. As I said in my last video, there have been whisperings of, a cut being happening in March, basically. And here's the funny thing: if you look at the Fed funds futures, it's still, using the CME page anyway, we still have a 35%, as of today, a 35% chance of a cut. It's 65% not, no chance of a cut, or of no cut, and a 35% chance of a cut. And so it just goes to show you that, as more data comes in, the market might reverse its decision on how that works. And of course, the Fed and the Fed funds futures kind of work together, because the Fed funds futures largely control the market, and the market largely controls the Fed. They all kind of control each other in a lot of weird ways. So it's good to keep an eye on all of the different pieces and how they fit together. All right, so so overall, as I was looking through all my charts, I check about 20 charts a day. I thumb through them really fast. I press my Control W to close them really fast. I noticed that most markets they weren't really affected so much. The S&P 500 dropped by 1.6% today. It looks like a pretty big red candle, but you look at high yield corporate smart money in higher risk bonds, they didn't seem to be bothered very much at all. This market just is going sideways here. It barely budged. Same with a lot of the emerging market charts that I looked over. To add to that, we have the VIX right here. We have a pop here, but it's nothing like, this. It's nothing like one of these, giant spikes. The market isn't flipping out right now. It's like, yeah, we kind of knew this was coming, and it ruffled some people's feathers that were hoping that we might get a cut in March, and that's pretty much what happened. One interesting part to this that I like one of the charts I always look at every day is the U.S. Treasury's yield curve. The red is yesterday's curve, and the blue is today's curve. So interestingly, you have the longer end of the curve dropping lower today in news of that, and so that suggests that that's pricing in a higher probability of a harder landing. And that it has to do with the fact that, if there's less of a chance of a cut in March, then we're increasing, the Fed's really strangling the market a little bit more than what was expected yesterday, basically. Again, not a lot of movement in a lot of markets. The last chart that I wanted to share for today was REMX. This is a rare earth strategic metals. I just found it interesting. This was one of the ones that I found to be actually pretty interesting. It looks like we're breaking down here even further. This particular market seems like, if I wasn't already holding this fund, it just seems like the most interesting one. If I was looking for something to buy, this would be it. This is an index fund. It's well diversified. Its total value in 2011 was $300. We're now at $48. We're near these lows. We could get down to these lows, and that would mean a 50% drop if that were to happen. But the overall landscape right now, again, very short term. It's a little, the markets aren't that worried. We're not in a collapsing situation. People aren't losing their jobs left and right. The markets seem happy enough. When I look deep into my crystal ball, I see the market broadening. I see the S&P going up from here. I don't see a top. I don't see any reason for a top right now. And so, to take the most advantage, I think, of a broadening stock market, look at things that are clearly undervalued. valued from a historical standpoint, from a PE ratio standpoint with stocks. And, this particular ETF is just one thing that sticks out to me. So that's all I have for you today. Again, markets seem what I would describe as largely unbothered by the Fed meeting today. And that's it. I hope you enjoyed this episode of Financial Markets Through Crystal Ball Gazing. Thank you for watching. Robschild.